Charity Accounts for Non-Accountants. Hello, welcome to Charity Accounts for Non-Accountants. I'm Katherine Patel. I'm a partner in Buzzacott's charity and not-for-profit team. I'm going to be looking at the Trustees report as part of the charity accounts. In terms of the requirements for the Trustees report within a set of charity accounts, I'm going to explore some of the background to the requirements under the charity statement of recommended practice, together with the detail that's required to be disclosed within the report. So really, why is the Trustees report needed? There's intense media scrutiny at the moment, and really the Trustees report being a critical element of the annual report and financial statements, as it really gives a narrative to explain the charity's achievements in the year and puts the financial results into context. Particularly useful given the complexity of a set of charity accounts and the financial reporting for charities, particularly when looking at the presentation of the numbers, the funds under the SORP framework. Recent issues surrounding charities and intense media scrutiny also mean that the Trustees report is vital. The public, potentially, given some of those recent cases, so Kids Company being a good example, potentially the public is less inclined to look favourably on charities and give them the benefit of the doubt. The Charity Commission, as a result, is also shining the spotlight on charity governance and the quality of trusteeship. So how are trustees managing the charity? And it's really important that they portray this within the Trustees report. Charity trustees also need to be able to demonstrate an understanding of their duties, and again, the Trustees report is vital in this. Overall, there are higher moral, ethical standards for charities, and it's not just a matter of following a sort of a checklist approach and ensuring legal compliance only. The Trustees report is a really good way to showcase what the charity is doing and how well it's achieving its charitable objectives. Ultimately, there's no such thing as a private charity. Transparency and the public perception must be considered, and therefore it's really important that the message is conveyed within the Trustees report to tell the public about what the charity is achieving. So really, altogether, all of those factors highlight the growing need for charities and their trustees to demonstrate good governance by making sure that they give the time and priority to their Trustees report. So just turning to what's the purpose of a Trustees report? Really, as previously mentioned, the report gives context to the financial statements to prevent the figures being interpreted correctly. You may have a very healthy financial position and you want to explain a little bit more about what you're intending to do with the funds the charity has, or potentially you have more negative news to portray within the accounts and within the Trustees report, and you need to explain that. So really, the Trustees report enables the trustees to demonstrate that the charity's resources are being used wisely and for the stated purpose, so that good stewardship of the assets of the charity. Also ensures that the public benefit reporting requirement is met, with the opportunity to show the impact the charity is making. And we'll come on to this a little bit more, but really important that the charity and the trustees are clearly showing the outcomes and the impact the charity is having, particularly on its beneficiaries. The report also shows that the charity is being organised and managed properly, so good governance, and that the charity is carrying out its activities efficiently and effectively. Potentially, and particularly for fundraising charities, the report also enables the charity to attract new resources, so for example grants and donations, to enable the charity to continue its activities. So it's actually a bit of a PR and marketing document. Obviously you want to make it very factual, but really chance here to demonstrate to potential funders, donors, what the charity is doing. Just on the Trustees report, I should note that although it's called the Trustees report and it is the responsibility of the trustees to present the report in the accounts, it will often be drafted by members of the senior management team of the charity, obviously for review and approval by the trustees. So who might be interested in reading the report? Really, this is an assessment of who are the key stakeholders for the charity. Regulators, obviously very interested in this. It's the Charity Commission that sets the reporting framework, and you file your accounts with the Charity Commission. Also HMRC, so for tax purposes, although the charity will be exempt to direct tax, then they will want to look at your accounts, potentially to assess whether there's any trading activity. Your beneficiaries and service users may also look at the accounts, and other charities as well, whether they're competitors of yours or maybe other charities that are looking potentially for partnership, collaboration work, and may want to look at your finances, do some due diligence on your charity. As I've already mentioned, potential funders and donors will also be really interested in your accounts, and the Trustees report really gives that opportunity to explain the finances, explain the reserves position to them if they're thinking about giving future funding. Your employees, your volunteers may also look at the accounts together with suppliers and service providers, and particularly in times of economic uncertainty, suppliers may only look to engage with the charity if they can see that you have a sound financial position. I mentioned the media scrutiny as well recently. So the media may be interested. They often look at CEO salary levels, for example, for the charities and looking at whether they deem them to be excessive for the sector. And then those with a specific interest. So, for example, there may be researchers, those who are looking to do further research reports on the charity sector, may be looking at those. So really assessing who your key stakeholders are and who will be really interested in the results that you're portraying, really trying to make sure that you're ticking the box for all of those stakeholders. And I think really the key really to keep in mind is impact. As I mentioned, it's how is the charity making a difference? What have you achieved? How do you achieve and add value in delivering your charitable purpose and your charitable activities? So really making the maximum impact from the resources that you have available, and make sure that your Trustees report is really demonstrating that. So turning to the structure of the reports, there are several key headings that should be included within a Trustees report. The order of these is flexible. The charity SORP includes them in a certain order, but really it's important for you to think about which information is it key to deliver upfront and as early on as possible within the Trustees report and the accounts. You want to keep your Trustees report relatively succinct, but if you're meeting all requirements, it is inevitably going to be a relatively long report. So there are the various headings that are required by the charity SORP. Some charities also decide to include a chair's and or a CEO's report at the start, really as a sort of executive summary of the key activities, achievements, challenges in the year, and it gives a really good summary of where the charity has got to, what it's achieved, that real impact focus. So the key headings under the charity SORP are reference and administrative details, the objectives and activities of the charity, and then really looking at the achievements and performance against those objectives and activities, looking at the plans of the charity for future periods, and then a financial review, so pulling out some of the detail from the financial statements themselves. And then the structure, governance and management, so that's looking at more of the legal and the constitutional governance side of things for the charity. Do consider the length of the document. It needs to be engaging for the reader, and also think about whether there are ways in which the text can be broken up a little bit more. So, for example, via the use of graphs, photos, imaginative formatting, make it more interesting and easy for the reader to access. Also make sure that it's not too long. You're probably looking at a length of, I would imagine, between 10 and 20 pages, definitely no more than 20 pages for most charities. So taking each of those main sections in turn, I'll cover the core requirements for each. So firstly, turning to reference and administrative details. So this should include firstly the trustees' names at the date of approval of the accounts. So this is important that you have the trustee body listed so that it's clear who approved the accounts at that date of signature. You could also include here, or in the main body of the report, the appointments and resignations of trustees since the prior financial year. Some charities choose to do that in the reference and administrative information, others within the structure, governance and management section of the full trustees report. You should also have here the names of key personnel, the senior management team, so those who would be classed as key management personnel. So for example, the CEO, Director of Finance, Director of Services, etc. And again, make sure that you reflect all of those who've served during the year, because that links into disclosures later on in the accounts in relation to the remuneration of key management personnel also. You'll want to include here the address, phone number, contact details of the charity, maybe an email address, website address here as well. The company and charity registration numbers should be included. Social media details also always worth including as well. And then the names and addresses of key financial and legal advisors. So your auditors, your independent examiners where relevant, lawyers if you engage one firm or a few firms of sort of key legal advisors. Following on from this section, you're then required to have a section that covers the formal aspects of governance, legal side of the charity, and this is the structure, governance and management. It is often moved to later on in the report. I think quite a lot of charity trustees feel that it's quite similar year on year and probably less informative about the achievements that the charity and the performance of the charity, and therefore is moved to later on in the report. So this will cover areas such as the nature of the governing document, how the charity is constituted, so is it a trust, a CIO, charitable company, limited by guarantee, for example. You'll also have in here the methods of recruiting and appointing new trustees, how do you go about that, and maybe reference here to the Charity Code of Governance as well, just making sure that it's clear within the trustees report that you do have reference to the governance code for charities. Looking at induction, development, training of trustees, so how do you go about making sure that your trustees are kept up to date with latest developments in the sector and in relation to the charity itself. Organisational structure, so looking at how the charity itself is organised, scheme of delegation, how are decisions made by trustees and which decisions are delegated to, for example, the senior management team. You may here include the reference to subcommittees depending on the governance structure of the charity. So, for example, an audit committee, finance committee, other service delivery committees as well, important to mention here, potentially with the membership listed as well of those committees. Also really important, given the Charity Commission's focus on conflicts of interest, related party transactions, noting here any relationships with other charities, other organisations, any potential conflicts and how you go about managing those as well. There'll probably be disclosures later on in the accounts relating to those, so good that you set the scene within this section regarding those relationships. So moving on then to one of the most important sections of the report, and that's the objectives and activities. So this is very much an introduction with scene setting, a brief background to the charity. What's the scope of the charity's work, the charitable objectives, what is it set out to do? And really a summary of those objects, the activities that it's set out to fulfil during that financial year as well. The overall strategic aims of the charity also good to refer to here. And how is the charity going to assess success against those strategic plans as well? So try here very much to link the objectives, the activities to the financial disclosures within the accounts. So for example, within the statement of financial activities, particularly under income or expenditure, you will be categorising your activities and allocating the spend, for example, to each of those activities. So you can talk about those activities in the same structure within the objectives and activities section of the trustees report. Also required, and this is a must, that you confirm that the trustees have had reference to the guidance on public benefit that was issued by the Charity Commission. So really a must there that trustees are acknowledging that point. The safeguarding policy of the charity, if relevant, if you're a charity that deals with vulnerable individuals, then to reference the safeguarding policy, and also your grant making or donations policy, again, if relevant for the charity. You'll also want a small amount here relating to the employees of the charity. So how do you look after your employees? And similarly for volunteers as well. And for volunteers, because you won't be valuing the time of volunteers for the purposes of the financial results, it's a little bit of a discussion around the activities that volunteers undertake and an indicative value based on the hours spent of the time that they're donating to the charity. For some charities, that will be quite a significant value and really important that you're confirming that within the trustees report. So similarly, the trustees need to make it really clear under achievements and performance how the charity has created value and an impact in the year by undertaking its charitable activities. So under the achievements and performance section, this is really where you can start to be a bit more imaginative in terms of how you present the activities and the achievements for the year. So look at the review of achievements against the objectives that you've set in the previous section and do that in a balanced way. So explaining the overall benefit that those achievements have led to for your beneficiaries and tell a story, make it engaging for the readers of the accounts and include other information. So this can be qualitative and quantitative. So you might want to include indicators here, performance indicators, particularly say for a school maybe, you'll have academic results. So some really clear performance indicators that you can include within a report. Any milestones, benchmarks, what did you set as your target and how did you achieve in the year? For some charities that's quite hard to do. A lot of the assessment of how you've delivered is a little bit more subjective rather than quantitative. So you may want to use case studies to demonstrate your impact on the beneficiaries, some quotes, photographs. Make it engaging, not just blocks of text that are a bit harder for the readers to access. Can a reader really look at the achievements and performance section and really understand what you've achieved in the year? You obviously have to make it balanced. So if you have faced challenges, things haven't quite gone to plan, then do make sure that this is a balanced approach and that you are covering those challenges as well. You need to include the approach to fundraising, looking at fundraising, the complaints, any complaints in the year. Are you registered with the fundraising regulator, for example? And then key risks. So under risk management, so you're required as trustees to undertake a risk management exercise, you'll have a risk register, and as trustees you're required to assess the key risks facing the organisation. Within the trustees report you're required to report those key risks. So this will only be maybe 2 to 5 key risks that you really feel are facing the charity. And it's not just about the discussion of the risks, it's also talking briefly about the mitigating actions that you as trustees have put in place to try to reduce the impact of those risks on the charity. As I said, don't be afraid to talk about what has not gone so well. The unexpected always happens. COVID was a very good example of that. Explain really why it didn't go so well and what you're doing to address that. Are there lessons that you've learned and things that you can do differently going forward? As I said at the outset, this report needs to be transparent as well, so it must be balanced and that readers of the accounts can trust what the trustees report is saying about the charities. But ultimately, it's the impact. What difference has the charity's work made to its beneficiaries and society as a whole? And try to capture that within this section of the trustees report. So moving on to the financial review section, this is really where you're trying to describe the financial results in a manner that a non-financial person will understand them. So really, what should this include? It's an overall commentary on the financial results for the year. Link that back to the achievement section. So talk about the ups and downs of income against plans, particularly for fundraising charities. This can be quite uncertain. There may be unexpected results. So also talking about the expenditure side and any major investment you've made in the year, for example, building projects, for example, for certain types of charity. Talk about the key funders, principal sources of income. Are there major donors that you want to thank within the report as well? And then also talk about any significant provisions, liabilities, contingencies. So charities that contribute to a local government pension scheme, for example, you may have a pension liability on the balance sheet and you need to explain that in a little bit more detail because you'll have a related pension reserve that's negative and it will reduce the net asset position of the charity, may look unfavourable, so you probably want to discuss that in a bit more detail, really to ensure that the readers are not unduly concerned about that deficit. If your charity has investments or a significant amount of disposable cash on deposit, for example, that you're holding, then you need to include an investment policy here, together with any ethical, social considerations that come into this, talking about the delegation of investment management to an external body, potentially, where you have a listed investment portfolio. What is your policy? What have you set that third party as a target in terms of returns on your listed investment portfolio? And then link that also with the investment performance in the year. So you've set a policy. How have those investment managers, how have the investments performed against the policy in year? And again, economic uncertainty can lead to some slightly unusual results or negative results that you will need to explain in a little bit more detail. What are you doing as trustees to mitigate that level of risk that exists on those? The reserves policy, absolutely critical for the financial review section and the actual financial position of the charity against that reserves policy. And I'll come on to that in a second, really just to talk about a little bit more around the reserves policy and what's required there. But in overview, the financial review section should be a discursive section that again is engaging but making reference to some of those key policies and the financial performance of the charity for the year. So in terms of the reserves specifically, and in terms of the disclosure of that within the trustees report, we'll cover the accounting for reserves in a separate section of the training. But for the report, just to make you aware that the following points must be covered. So you're looking at the total charities funds at the end of the accounting period. So that's basically your total net assets, your total funds, which will include any endowment funds, restricted funds, and unrestricted funds. What you then want to do is split it down into those various categories of funds. So you will be acknowledging that a proportion, if you have them, are held as sort of capital funds in endowment. You'll also be identifying any restricted funds. So what's the level of restricted funds that have conditions upon them set by the funder or the donor that mean that they're held for restricted purposes and really can't be used freely for the overall charitable purposes. Within your unrestricted funds, they will then be split down potentially into two areas. You will have the designated funds, which are those funds that the trustees have ring-fenced for specific purposes, and then you'll have your general unrestricted funds, which really is the remaining balance of those unrestricted funds. So if you do have designated ring-fenced funds, you need to talk about the purpose of those. Why have you set those designated funds aside out of your unrestricted funds? It's potentially a way that some charities will sort of try and reduce their free reserves levels, their general funds, to make really the charity look more attractive for future funding. So you must really make it clear the purposes of those designated funds. And also the likely timing of any spend and utilisation of those designated funds as well. It might not be for sort of 2 or 3 years down the line. You may need to build those designated funds up, for example, if it's for a capital project, but nevertheless, make that really clear that these are for a specific purpose. Some charities decide to ring fence or designate the carrying value of tangible fixed assets or performance related investments. And that's really to demonstrate to the readers of the accounts that these are not liquid funds that are freely available for the charity's future spend, and therefore they're set aside in a designated fund, and it really makes the free reserves of the charity much clearer to see within the accounts. If you do that, then really important again in the trustees report that you're explaining the reason for setting aside those funds as designated funds in a fixed asset or PRI fund. So then you'll have the statement of reserves held at the end of the accounting period, and this is the reserves referred to by the Charity Commission are your free reserves. So this will be the free reserves being your general unrestricted funds, deducting any value of fixed assets that are held in those funds. If you've ring-fenced a fixed asset fund, actually your free reserves will be equivalent to your general unrestricted funds. And this is the figure that you're holding at year end that you compare against your reserves policy. So within your reserves policy, you will be expected to have set a target level of free reserves. So potentially that the charity wants to hold the equivalent of between 3 and 6 months, the budgeted operational spend for the next financial period. and then you're looking at your actual free reserves, which may fall within that range or actually maybe lower or maybe higher than that range. You talk about this within the trustees report, if they're falling below the range or above the range, really a discussion around why that's the case and what you're trying to do in order to bring the actual free reserves in line with that policy. The final section is future plans. You may want to include future plans slightly earlier on with maybe potentially just after the achievements and performance section. And really for future plans, it's not creating a rod for your own back. Don't be too prescriptive here. Business as usual is absolutely fine, but set out some of your key aims for the future financial year. That might be the next year, but it could also, you may want to look slightly more medium to long term if there are some major plans that the charity wants to tell its readers and its stakeholders. But yes, don't cause yourself a problem for next year by being too prescriptive in terms of those objectives and aims that you're setting for yourself. So that concludes the session on the Trustees report. Many thanks for listening.